surprise, surprise, the best performing stock over the last 23 years is Monster Beverage, Monster Energy Drink. So long story short, the reason we have this poll here and the reason that we brought this particular stock question up is about owning the index in equities versus about owning the index in bonds. And this really goes to why you want to own, in my opinion, the index in stocks is upside's infinite. It is very difficult to predict what the next monster beverage is going to be. And even with hindsight, you know, a lot of these folks on the call here probably look at stocks and listen to CNBC all day. And, you know, 31% of people thought it was NVIDIA. And NVIDIA has done great. It's done 28% per year. It is of the top 10 stocks out there. But Monster Beverage has outperformed it. And if you look at percentages here, it's outperformed it by a factor of upwards of 4, 120,000% versus, you know, what is that? 30,000% over the last 24 years. So when you own the broad stock market, you're not going to miss out on the next NVIDIA, on the next Google, on the next, and I read a poll or a study recently that the broader based, you know, if you run a very, very concentrated portfolio, you're actually going to underperform the index by a larger margin than if you own, let's say, 100 stocks or 500 stocks. So here's that chart here. And then surprise, surprise, this is bonds over the last 10 years. Bonds have returned 1.36% over the last 10 years. Okay. And I think I got to close this down. So almost no one got that right. People thought, oh, bonds have returned 3 or 4 or 5%. And, you know, memory is very short. We look at where bonds are today, which are, you know, 4 handle. And folks are like, oh, bonds must return, you know, fairly decently. But this is the reason why you don't want to own the index in bonds, because you own everything and your upside's only par. And if you look at yields on bonds over the last 10 years, well, guess what? They've been very, very, very low. So if you own the ag, you've returned 1.36%, a total of less than 15% in 10 years. If you invested at 100, your 100's now worth $114. And that includes dividends.